the 100 days moving average line, the red line, has kind of like crossed back. We have broken a very key level, upside targets for the entire STI. So from 3004, are we seeing a bull run in the Singapore stock market, specifically the STI, the Straits Times Index? Can we start to see more upside from here? Because over the past few days, we have broken a very key level. Hey guys, Joey here, top tier advisor, trader in Phillips Securities. And in this video, I'll be doing a very quick analysis on the Straits Times Index, right? Singapore's key index that tracks pretty much the top blue chip stock, the banks, all right? And over the past few days, there are some bullish actions that are spotted, right? So in this video, we'll dive into the STI, and I will also look at some of the other indices like maybe the Dow Jones, the S&P 500, the Nasdaq very quickly as well, just to see where we are for each of the different key indices in the US as well. So you don't know if right now in the Singapore market, is it a bull run? Can there potentially be more upside? Why is it so? Make sure you watch this video all the way to the end. Let's go. Okay, so this is the STI, the Straits Times Index, trading in about 3,498 right now, as you can see right over here. So before I talk about where we are right now and if there could be more upside, let me just do a quick run through of what has happened for the entire Singapore Straits Times Index over the past 2 years. So you can see, right, for the Singapore STI, right, we have been trading, I would say, in a very sideways movement since 2022. I mean, compared to the US, which we'll take a look later, in terms of the S&P 500, the Dow Jones, they were all selling down quite a lot in 2022 when they'll talk about rate hikes and inflationary pressures, right? But for Singapore, we didn't really sell down that much. We found a pretty good support somewhere around that 3,000 level right over here. So you can see this is where we rebounded somewhere in 2022, rebounded. So a couple of rebounds since 2022. In fact, just last year or so in November, we headed to near 3,000 to 3,050, and we started to see a little bit of a rebound. So for more than 2 years, right? For more than 2 years, you can see that we have been trading above that 3,000 to 3,050. That is a very firm support that we've been holding above for about 2 years, right? So the trend is pretty much sideways, I would say, in the longer term, right? Since 2 years back, all right, after the rally we have seen after COVID, when there were like a vaccines being announced since the beginning of 2021 or maybe end of 2020, right? We saw the market rally all the way until the beginning of 2022. It's just sideways, right? It's just sideways. So the range is from like 3,000 support level all the way to this resistance level right over here, and this resistance would be somewhere around that 3,400. You can see we sold off, same thing right over here. We sold off somewhere over here as well. We sold off, and maybe around 3,450 as well, 3,450. That was in beginning of 2022. So around 3,400 to 3,450. Those are very key, I would say, psychological resistance level that has held over the past 2 years, right? So right now, let's zoom in to where we are. So that is the range, right, from 3,000 to about 3,450. It's about 450 points kind of range, right, as it swings up and down, right? Pretty much in this range, right, over the past 2 years. So the point here is that over the past week, right, over the past few days, you can see that. Let me zoom into where we are based on these two resistance, these two red lines that I've drawn, right, based on the past resistance level 3,004 and 3,450. You can see right now we are at 3,497, right, which is above 3,450, which is above 3,400. So we have actually attempted to breach this 2 years psychological resistance level, right? So there can actually be some signs of more upside momentum, well, because over the past 2 years, as I mentioned, right, we have been capped below. Every time we near it, we sold back down, but over the past few days, right, led by the Singapore banks. So I did a video on the Singapore banks this last week as well. Of course, we saw banks like DBS, OCBC, and UOB pushing higher, surging to a new high, and of course pushing the index up as well. But right now, just looking at the index, right, of course led by the banks, right, it could really spark off a new bull run, right? As long as we were to stay above this 3,400 or maybe 3,450 level, right? Because we have broken a very key resistance. So this 3,004, let me turn it to green in color right now, or maybe even the 3450, we can turn it to green in color, because these will all form what we call a new support base as we were to head higher. All right, so as long as we stay above these two support levels, previous resistance we have broken, now it is support level, it can provide a base for more upside to happen, and the uptrend can actually start to take shape. That means we can potentially get out of these 2 years sideways consolidation, right, to potentially an uptrend that is taking shape, right, just by breaking a very key resistance level, right? But let's take a look at some of the trend indicators that we can also focus on in terms of gathering whether are there any trend change, right? So I mentioned, right, over the past 2 years we have been in a sideways trend. So I just talked about prices, just moving up and down from like 3,000 to 3,450. That is just based on prices alone. But maybe look at some of the indicators like the moving averages, right? Can take a look at what we call the 100 days moving average, this red line, and even the blue line, the 200 days moving average, right? So you can see the red and the blue line since 2 years back. Both of these two lines were pretty much just moving sideways. Look at the blue, it's just like flat all the way. The red, it goes down a bit, goes up a bit, but I would say a little bit sideways, which is correct, right? Because they have been, STI has been consolidating sideways over the past 2 years. But let's zoom into where we are right now. You can see that finally over the past over month, since like maybe May, June, you can see that the 100 days moving average line, the red line, all right, has kind of like crossed back above the blue line, all right? That's one thing. So you want to cross back above, and more importantly, you want to see that these two lines, these two longer term moving averages are starting to point up. So you can see right now that the red 100 days moving average line is starting to point up, slowly taking shape. The blue takes a bit longer because it's a longer term 200 days moving average. It's not that sensitive, but you can see it's slightly sloping up as well. All right, so in terms of the longer term trend, we are indeed seeing some signs of a trend reversal from like a sideways to potentially pointing up as well. So as long as we can stay above, as I mentioned, that 3,004 to 3,450, these two lines, right, the red and the blue line, will slowly start to slope up, point up, and that will give more confirmation of the longer term trend really turning up, right? So that's the longer term trend. Let's take a look at the short term trend, right? So for the short term trend, we want to focus on this green line, this green line right up here. This is what we call the 20 days moving average. You can see it reacts a little bit faster, quicker. It's more sensitive, compared to the 200 days blue line, which is like a longer term. The 20 days moving average is a short term, so it reacts faster. All right, and how do we know if it is in an uptrend? So since like April, right, since March, you can see this green line, same thing, it was pretty much flat, right, nothing much. But somewhere around like April, pump, right, we broke quite a key level, like maybe the 3250. So there was a little bit of a resistance right over here. You can see resistance, we sold off, and finally pump, we broke above the 3250, and that kind of like sparked more momentum led by the banks. All right, and you can see the 20 days moving average, right, line, this green line, also started to point up right over here, up, flat a little bit, up. Now obviously guys, you can see that this 20 days moving average line is up. So the short-term trend has turned up since about 2 months back. All right, now it is pointing up, and the fact is that we have broken this very key resistance level, while the 20 days moving average green line is still pointing up. So there could still be more upside in the short term as well. All right, so this is the reason why for STI, yes, came to watch this, because led by the banks. I covered the banks last week, but it seems like now we can potentially see a very good bull run rally, all right, for the STI finally after 2 years of pretty boring sideways move, right? As long as we stay above 3,004 to 3,450, these are very key levels, as I mentioned, that can lead the new phase up for the entire STI. So what could be the potential upside targets whereby we may see some selling again for the entire STI index? So let me just scroll back a little bit, right? So this was in like 2022. Let me just scroll back a little bit. You can see that somewhere around like 2018, right over here, right, 2018, we started to see selling happening right over here, So let me go to draw what we call resistance lines based on the past prices right up here. So it doesn't mean that when we draw these resistance means you will definitely go there and then selling will happen. No, but based on past prices, right, we can gauge where potentially sellers might come back again. So it will be right over here, 3,600 to maybe 3650. So let me just zoom in all the way to front right over here, and you can see that, yeah, this is what I've drawn. So that could potentially be the upside targets for the entire STI. So from 3004 all the way to maybe 3005 to 36 or 3650, that is, pretty much what could happen, right, in terms of it staying above this new higher support level. So the support has gone from like 3250, as I mentioned, this is like the support, and now it is like 3004 or maybe 3450. So as long as all these new support levels are holding, looks pretty bullish, right, we can potentially hit towards that target. So let's take a look at the Dow Jones right now. And guys, if you like this video so far, you found some value in what I talk about in terms of the STI, make sure you hit the subscribe button, hit the like button, follow as well, so that you will not miss out on any videos like this, right? And that will really help out the channel. Thank you so much for doing this. So let's move on to the Dow Jones to see if there's any difference compared to the STI, the Singapore Straits Times Index. All right, so Dow Jones right over here at about 39,000, right? 39,753. So you can see that for the Dow Jones, it is slightly different compared to the STI. So I did a video as well, a few months back on the markets, and I mentioned that for the Dow Jones, even the S&P 500, later we look at it, right? They have already been in an uptrend since last year, just by looking at the 100 days moving average. Remember the red and the blue line I talked about? So since last year, beginning of last year, the US market started to rally already. So very strong uptrend, pushing higher. In the short term, we saw a little bit of selling and some sideways consolidation, but generally an uptrend, right? But for Dow Jones, you can see that over the past like 4 to 5 months, we have found a little bit of a resistance right over here, and that is key, right? This level is very, very important. In fact, we are right below this very key level right now, and that would be the 40,000, right? 40,000 level. You can see right over here, we have touched like 1, 2, 3, 4. Now we're like a 5th or 6th time right over here, and we can't seem to break this 40,000 level, right? So there are signs of an uptrend, but in order for the uptrend to actually continue to a higher phase, right, we need to break what we call a very key level. So I mentioned for the STI, it was that 3450 to 3004 that has been holding for the past 2 years. For the Dow Jones, I mean, it's only 4 or 5 months that we've been holding below it, but that's still key, right? That's still key. We need to break the 40,000 in order to see more upside. So the range right over here, you can see support being found maybe around that 37,800. You can see that's where we pretty much have been consolidating since like February and March. So if the 40,000 to give way, we can potentially see more upside, maybe all the way to like 42,000. I mean, based on this projection right over here, in terms of like a 2,000 range, we may see upside targets being revised maybe all the way to like 42,000. So it looks quite good for Dow Jones as well, uptrend, but we need to get above and break that 40,000 resistance level. Okay, so very quickly, let's take a look at the S&P 500 index, right? And you can see right now we are trading at about 5,584. So yesterday we saw a little bit of profit taking, but overall you can see quite clearly that same thing like the Dow Jones, the uptrend has been intact, I would say, since the beginning of last year, maybe February, March last year. We saw the 100 days moving average, the red line crossing above the blue line. So longer term uptrend has been intact since the beginning of last year. Now, it is pretty much just continuing. Of course, we saw some short-term weakness. It sold back down a little bit, but we have started to push a little bit higher over the past 2 to 3 months. So you can see right now at about 5,600, maybe 5,650 if I can draw resistance levels over the past 2 days. It seems like we can't really go above that level. So about 5,650, maybe some temporary resistance level. Support wise, perhaps around that 5,000, let me see, right, about 5,500. I think that could be like the near-term support, right? Even somewhere in June last month, you can see it was trading below this resistance. So it used to be a resistance 5,005. You can see we're like trading below it for like about 2 to 3 weeks, but somewhere around like July, in the beginning of July, we managed to break the 5,500. Great, and we started to push higher. And all this while, you can see that the 20 days moving average, this short-term trend, has been pointing up. So 20 days moving average line pointing up, price above it, plus we break a resistance level, all that can see it push higher. So the range right now, I think it's about 5,500 maybe to 5,650. Might just consolidate up and down, and of course if it breaks that 5,650, great, it is a new phase again for the S&P 500, whereby targets can be revised maybe to like 5,007 or maybe to 5,800. So yes guys, that's it for this video. I've covered the STI, so you now know why I like the STI, as to how we can potentially see more upside. It could even be a bull run as well. You definitely want to put this index back in your watch list, all right? And you can even trade what we call the STI ETF, right, that tracks the entire STI index, right? And we have covered the S&P 500 and the Dow Jones as well, all right? So I hope you have a better idea on these two indices, right? So Joey here, thank you so much for watching. And if you want to find out a little bit more in terms of like the entire strategy, what we call the one good trend strategy, as to how we time our entry to get in and get out, how do we even know how to focus on winning stocks, make sure you attend one of those free webinars that we're still running. The link is right below this video. Around it, click on it, register for this 2 hours free webinar where I'll share with you guys a little bit more on my one good trend strategy. I'll see you soon.